Hey everybody, Christopher K. Smith. This is a FibLines interim update. I usually only do these updates once per quarter, but I have some stuff I'd like to share with you quickly, so let's try to make this as quick as possible. So what are FibLines? Just in a nutshell, the goal of this video was to add support for Cramer's Cloud King stocks that I'll go over quickly here on the left. But in the course of doing that, one of them was Red Hat, and I thought accidentally RH was the symbol, so I brought up Restoration Hardware and did the FibLines for that, and it was such a great example, I figured I'd just show you briefly so you can get an illustration of how FibLines work. So basically, FibLines is a way of looking at a chart and determining hidden areas of support and resistance, and use that to do it. You select the little FibLines, Fibonacci retracement, which is a little percent sign thing down here, and you pick what looks like a top and the bottom of the chart. And if you pick them correctly, you'll notice some amazing things that stocks often tend to, if you select your 100% area, they often tend to deflect right at 161, 261, and then 423. And these are ratios in the Fibonacci sequence that it's kind of difficult to explain. If you want to get more background on FibLines, you can go up to YouTube and search for Introduction to FibLines, where I tell you how it is, how it works, and why it works. But basically, the bottom line is this drawing technique is encapsulated into an indicator called FibLines. Once you add the FibLines to the chart, it draws all the lines very automatically, and you get not only the primary lines, the 100, the 161, the 261. You also get other levels of lines that can be used for support, trading support and resistance. And so just to show you quickly a trade I did this past week with Facebook. Actually, let me save Facebook for the end. So the objective of this video again is to introduce the Cramer's Cloud King stocks. Now Cramer invented the term FANG, Facebook, Amazon, Netflix, and Google, and recently came up with the term Cloud Kings to identify the stocks that were dominant in the cloud space, cloud data center, outsourcing your IT to a cloud. Microsoft's big into it, obviously. Google is also, Amazon. So here's the Cloud King stocks. You have Adobe, which I had covered previously. CRM, Salesforce.com is new. ServiceNow is the next one, so I've added FibLines for that one. You can see some of these stocks have had huge moves here. And ServiceNow, for example, went to the 100, the 161, the 261, went to the 423. It looks like it was done for a while, and then it kept cooking up there. In an update last fall, I added support for the next levels above the 423, the 685 and the 1108. And we can see that ServiceNow's got quite a ways to go there. Red Hat, also pretty interesting stock. Got up to the 423, got deflected back down to the 261. Sold off even lower, and then I guess got a bid from IBM. It seems to be on a rally here at a new all-time high. VMware, I added just recently, I think in my prior quarterly update on March 23rd. Splunk and Workday. Now, the interesting thing about some of these companies is I have experience with them my current employer. ServiceNow, for example, we use that one. We also use VMware, and we also use Splunk, which is this database syslog gathering tool. So look at these stocks. I think the one that I like right now, I'm not sure if I know the fundamentals very well, but Splunk would have to be my favorite because it went up to the 423% line here. Actually, I'm sorry, this was the 100, the 161, the 261. Right above the 261, came down to the 161, rallied back up to this orange line here and came back, and it's hanging out right here at the 261 line. So I think Splunk looks best on the chart right now. I don't know too much about Workday. So also, like I said, I've added Restoration Hardware, and this one almost by accident, so I decided to leave that in there. Restoration Hardware was a favorite of Bruce Marshall from John Carter's Simpler Trading. So I figured I'd leave it in there since I calculated the FibLines for it. So now over to Facebook. So these are all in the FibLines indicator now and available up on the FibTools sales store. So Facebook. So Facebook, I've been a fan of this company for a long time. They've had a lot of bad press, but the users just keep coming back. And as you see, it had a huge run up here to an all-time high at about 217 back over the summer. I was long at the time. Earnings came out, got slammed all the way back here to the 261 line at 160. Sold all the way down. I finally shook out at about the 150 level. Got all the way back here, almost below to the bottom of the 100% line, and then rallied all the way back up. And just recently, I had a nice pop here. I traded this past week. I traded options this past week. I'll go to a shorter term time frame here. This is an example of kind of the kind of insight you get with the FibLines that you don't get with other indicators. So let me go to a shorter term time frame here. So Facebook had a huge move off the bottom here, shot up to this point, got to this gray line here, got deflected back. At this point I was kind of anxious to get long the stock, but it already had such a big move off the 167 level here up to about mid 170s. But I wanted to get long, and I did. So what I did is I bought at 173 a share. I mean, it's a lot of stock. It's a lot of money for 100 shares of stock. So I bought a 100 call option, deep in the money call option for $75, and bought 2 of those 75 same options in my IRA. So total 300 shares exposure. That was, I think, on Tuesday the 2nd. Next day, opened up right about the same level, actually sold off a little bit, opened up nice and shot right up to 78 levels, up about 178, up about 3 points on my contracts. Feeling pretty confident, feeling pretty full of myself, and then boom, it just sold off. Some bad news came out that the password database was stored up on Amazon in clear text. Anybody user could find it. So the stock sold all the way off, and I was feeling kind of depressed there because I had a nice 3-point profit that went away, and I said, you know what, if I get a rally back up to that point, and it fails just short of that, I'm going to take the profit. Luckily for me, an analyst came out the next day and upgraded the stock. Stock shot right back up here to 178. I took that as an opportunity to sell my 3 call options, up 3 points each. I made a quick $900 on that trade, 300 in my cash account, 200 in my IRA, and I was out. So I'm still long. I'm still positive on Facebook here. It kind of went back sideways. Taking a look at the longer term picture. Again, it's a stock everybody loves to hate because of all the negativity, but people just keep coming back and using it. So anyway, the way I use the FibLines there is once it broke that resistance point here, I took that as a continuation opportunity. See, it got deflected right back off of here and then started to meander to the upside. I took that as a continuation opportunity. Got right back up here to 178. Didn't really see that as a top because our FibLine wasn't until 178.64, but kind of fell short of that, and that was then the old resistance, and that's the reason why I decided to sell at that point. So you do get some interesting insight with FibLines you don't get with other indicators. Here's an example of how I made some quick money with it. So longer term, back to Facebook. Let's go to the daily. Longer term, again, we got that old high here at 217 as a magnet. The stock's going to get sucked back up there just as surely as the QQQs and the NAS and the Dow are getting pulled back up there, all to those new all-time highs. Facebook hasn't quite kept pace, but I'll bet the earnings really have. And I think once the earnings are out, which are on 4/24, April 24th, in a couple weeks' time, you're going to see the stock get right back up here to just south of 200. 198 is the first target, and the old high 217 is the target after that. Now to trade this, you're going to have to be nimble because what's going to happen, I think, is what we had last earnings where the stock just gapped. It gapped to the upside from 150 up to like 165 on the earnings. So you're not going to get a slow, steady meander here. If the earnings are as good as we think, you're going to get a pop right up there to that old high, 198, in overnight. So you're not going to have a chance, I don't think, to dribble this one along. But the fact that it broke out of this resistance area here is very positive. And I am bullish on Facebook, so if we get any kind of pullback this week, I'll reload those call options, and I'll try to stay long through next earnings again, which is April 24th. So that's it. So that's the Cramer Cloud Kings. I like Facebook of the Cloud Kings. I like probably Splunk the best out of all of them. And that's about it. So as always, you can get the FibLines up on the FibTools sell store, fibtools.sells.com for $99, and that includes the whole indicator with about 200 symbols, including my 4 quarterly updates plus some interim ones such as this. That's for a annual price of $99, and my competition sells this for $1,000, and I do it for only $99 for a year. And you'll get some excellent insights to get with this you don't get with other indicators. So that's it. Thanks for watching, and have a great day.